Hey guys, I'm Richie Gerzon, host of Charleston Property Show and a Charleston Realtor. Today we're interviewing Clint Hammond. He's a branch manager at Mortgage Network, and we're going to find out whether or not, in his opinion, is now a good time to buy and get a mortgage and get a new house. Let's get going. Clint, why don't you just give us a little background of who you are, where you came from, and how you got to where you are now?
Yeah, I started with Mortgage Network in 2003. So I've been with this company for 18 years now. It's been a great place for me to be, obviously, because I haven't gone anywhere else. But
yeah,
came back, opened my office here in Columbia in 2005, and have been growing this book of business and been growing this branch ever since. And now we've got about 12 of us in here, and just riding through the storms that we've seen and riding through this next one the same way. So that's pretty much the gist of where I've been.
Awesome.
Yeah.
Well, so what's on everyone's mind is now a good time to buy. Let's hear your opinion about it and why you feel that way.
Well, I mean, it's like you and I had talked about earlier. I'm of the opinion that in most cases, it's always a good time to buy for all of the benefits that come with home ownership. Now is no exception. Mm-hmm. The reasons for why it's a good time to buy are going to always vary. Currently, the cost of money right now makes it where your buying power is probably as much, if not more, than it ever will be.
Yeah.
You have the ability to get a lot more bang for your buck with extremely low interest rates. And, as we've moved past some of the initial shock and awe, so to speak, of COVID, where we had a big risk off move last year, we started to see a lot of product come back. We started to see a lot more availability to different ways to structure loans. And so when you take into account the broad menu of products, couple that with low interest rates, it makes it real simple to put a good financial strategy together for somebody to buy a house that, in a normalized market, maybe they wouldn't be able to. The struggle right now is the same struggle that everybody's dealing with, which is inventory. So, it's you got to fight some of that fatigue when every time you want to go look at a house, it gets snapped up before you get there, or before you can put your offer together, whatever. But it's a great time to buy from the perspective of how much buying power most people have right now versus.
Let's dig into that buying power, because
yeah,
interest rates really are at a historic low. And, ever since I was at the age that I would generally buy a house, interest rates have pretty much been low. But my dad told me how it was in the 80s. I mean, the interest rates are outrageous. What would, for a typical, let's say $300,000 house, what is the payment now versus what it would be if the interest rates were 5-10% or something?
Well, I mean, if you talk about it in terms of loan amount, a $300,000 loan amount at today's interest rate comes with a principal and interest payment of $1,224.
Yeah, that's amazing.
Yeah, if you look at that exact same loan amount at really what would also be considered a historically low interest rate,
yeah,
say something around 4.25%, which that's still historically speaking, that's
absolutely, that's a great interest rate.
Yeah, that payment turns into $1,475 real quick. So the rate environment out of the gate gives you about $251 a month of additional buying power. The other way to look at it is take that same $1,224 payment and work the other way and say, okay, well, in that normalized market, to get the exact same payment, what would my loan amount be? And it's $248,000. So to me, the easier way to illustrate it is,
yes,
rates give you an additional $50,000 worth of borrowing power that in an even, a very low rate environment of 4.25%, it's a $50,000 difference. And you don't have to go back that far. I mean, people hear 4.25% right now and they go, God, it's such a high interest rate. And comparatively it is, but in fall of 2018, we were writing the best of the best credit, primary residence, single family. The ideal loan was pricing out at 4.75%. And that
was, I mean,
less than 3 years.
My house is in that range,
Yeah.
So we're talking to you right now, but I was, those are my days working at Boeing, and of course the bank was like, "Hey,
Yeah.
whatever you want, you work
Yeah.
where?" And I think it's
So,
still a great
you
interest
know,
rate. It's very
three
affordable.
short years ago, you were at 4.75% or so, and
Yeah,
that would evaporate another $25,000 in terms of that loan amount. So you're talking about a $75,000 more borrowing power to keep the payment the same, and that's kind of incredible when you look at it in those terms.
I mean, what do you think? It's not really. I don't know if it's a fair question. What do you think the chances are rates will go to like 5, 6, 7% in the next 5 years? Because everyone's talking about, not everyone. You hear a lot about inflation. You hear a lot about how can we keep these rates so low, blah, blah, blah,
Yeah.
blah, blah. It's at some point it's got to normalize, doesn't it?
Yeah. If I had the ability to make that prediction with any level of certainty, then I would certainly probably have already retired.
Yeah.
Absolutely. If I could play the market like that. I think you've got a lot of different factors at play over the sort of shorter run, which I'll call 1 to 3 years. I think that you will see rates go up. I think that you will see them go up that 5, 6, 7% at some point. Yes. But if we're going to put a timeline on it, I would see this particular cycle maybe hitting somewhere in the mid 4s by the end of that. And then, just a good old fashioned recession comes along, and we probably see a small pullback in rates, or at least a leveling off.
Gotcha.
I've been saying this to a lot of people lately, which is, you don't ever want to try to catch a falling knife. So yeah. Trying to time it up perfectly is nearly impossible. And, at the end of the day, as low as we are right now, you can't imagine a scenario where we're not at some point higher than this in the near future.
Yeah. So, I mean, really right now, debt is cheap. And even if there is inflation, this is the time to if you're going to have debt, get it now, right?
Absolutely. And that's what we're doing with so many people right now is either buying that next step up house, the house that maybe you're not prepared to buy or weren't thinking about buying, but it was on the horizon. It was a purchase that you saw coming 3 years down the road based off of the age of your kids and where schools or whatever the case may be. And maybe we're fast forwarding that timeline a little bit for the buying power side of it. Because, if you wait 2 years, you don't know. And I always put a higher value on what I know versus what I'm assuming or what I'm predicting or what I think is going to happen. What I know for a fact is always going to hold sway over the assumptions.
Yeah. I mean, that's what's great about a fixed rate. So you're getting that it's not going to change. So if inflation does happen,
well, that's what a mortgage is,
subsequently
right?
Should go up, but your payment will always stay the same for 30
That's correct.
Years, right?
That's correct.
So I mean, when you think about it that way, that's really a great time.
Yeah.
To buy.
Yeah.
Is there anything else about the buying power you'd like to talk about that when people are trying to understand that concept?
I mean, it's a little redundant in some respects, but it's really more to just highlight the overall importance of it. I mean, if you see a scenario where you're able to buy more house than you ever could have in the past, you don't ever want to go out and rush out and make a mistake. Don't get me wrong.
Yeah.
If ever was a time to step out just a little bit outside of your comfort zone as far as what the sticker price of the home looks like, 99% of the people that you're talking to and you're working up scenarios for, they're shocked at how attractive the payment is based off of what their assumptions were going into it. Like, there's no way I could buy 400 or 500 or whatever, or 200 or 800. There's no way I could buy that. But then when they see the payment, and that's the real life part of it, is what's my monthly payment.
Absolutely.
They see it, they're like amazed at how much they actually can buy in this market.
It really is amazing. I mean, that's these decisions now will make a huge difference in your life for you. If you have kids, the rest of your family. I mean, where you live is so fundamental to your quality of life. All right, so let's now start talking about the challenges in this environment with the supply. Do you have any? I don't feel like I truly understand the reasoning behind the low supply versus the high demand, especially after the pandemic. It seems so counterintuitive. Can you just talk a little bit about that? So we kind of,
Yeah, I mean, there's probably a lot of factors. Uncertainty is a big one, I think, in some cases where initially, as the pandemic kind of set in and we were really in the thick of it, this time last year and late last spring and through the summer, am I still gonna have a job? Am I still gonna, how's all this gonna play out? I might not want to list my house because I don't want people coming in and out,
That's true. I hadn't even thought about that.
So for a while, there was a lot that I would kind of blame on that because it made sense in my head. What I can't necessarily make sense of is inventory is actually worse now and has been worse this spring through our summer. It's been worse now than it was last year. So I think a lot of it has to do with the builders maybe being behind. So a lot of your new construction stuff has been slow to start. I know here locally, Lexington County had put a moratorium on new construction. So the builders aren't able to actually build to add supply to the market from the new construction side.
Really? That's interesting.
Yeah. And, if you think about the construction side, that's where housing supply ultimately has to come from, right? I mean, there's only so many houses that are currently sitting on the ground today.
Yeah, absolutely.
But you think about the process of building a house, it's not like you can go, oh, well, there's an increase in demand and Monday of next week, we've got 500 new houses out there. There's a ramp up involved in that, whether it's the order of materials and the acquisition of the land and getting your workers on site to actually start laying foundations and putting sticks and bricks up. It's not immediate. It's a 6, 8, 9, 12 month type of a deal to ramp up the production side. So I think that the demand has just soared at a pace that the ability to put new houses on the ground can't keep up with. I mean, it's just not feasible.
So we also have a demand of people moving from larger cities down into the South, right? I mean,
and that's what
Charleston.
That's right.
It seems like it defies everything regardless for the last.
That's right. It doubles the problem for us here locally in South Carolina is, this week alone, I've pre-qualified, and it's just Wednesday. I've pre-qualified, I think 6 people who are moving here from either New York, New Jersey, or Massachusetts.
Really?
Yeah.
Yeah. Right.
And the reason that they're moving here, it's kind of funny.
You get to hear the reason. That's great. That's interesting. Yeah.
One in particular is interesting, the result of COVID and everybody kind of shifting to this work from home situation has made a lot of what would otherwise be in-office jobs are now capable, and they've got the infrastructure and the setup to work remote.
Yeah.
So one in particular from this week, she's coming down here from New York with her New York salary.
And she's keeping her New York salary.
Keeping her New York salary.
That is fascinating.
Yeah. So
I know a lot. I have a lot of friends from Boeing. Back in the day, they were they moved from Seattle to Charleston, but your salary doesn't change. They had that Seattle Boeing money down in Charleston. Of course, they're getting whatever they want most of the time.
Not to mention that when you go from a $17,000 a year property tax bill to a
$17,000. I don't know much about the tax
on a comparable home.
Yeah.
They're double dipping in a lot of ways because the money's cheap. They're seeing 1/10 of the tax bill, and they're keeping they're keeping their Northeast salary, so they can come down here and buy whatever they want, and that's eating up yet even more of that supply that is already short.
So have you seen? So we have even more of a supply problem with the lumber shortage too. How is that, in your opinion, played into this whole equation?
I think it's all part of the same. I mean, it's just another symptom of the same issue. I mean, it just starts compounding on itself. So, when you have lumber shortages, or even if you can get the lumber and you're paying what you're paying for it, you can't build the house with the right margins. And so maybe some builders aren't building what they normally would be.
Yeah, I think there's a lot of people holding off a little
Yeah, I do
but
too.
still with the money so cheap, you kind of have to weigh the pros and cons of that, even if you are maybe spending a little more, but it's unlikely house values are unlikely to go down. Maybe that's wrong, but see.
I mean, I think they'll level off. I think when and I feel like the last month or so, a little bit more inventory has trickled in, or maybe it's coincidental with what I'm seeing. But, you know, at some point the inventory will come back into the market, and you won't see quite the same astronomical jumps in value.
Yeah.
But I don't think you're going to see the balloon deflate. I think you're just going to see it plateau.
I agree. I mean, there's, especially in the South, we have to look at everything from South Carolina
right.
point of view. There's so many reasons to move here from so many other places in the United States. I think almost despite whatever happens in the economy, we're just going to keep seeing people move here from other parts of the state, other parts of America and the world, really, because it's
absolutely
has a lot to offer.
Yeah. And I don't see that slowing down anytime soon.
Yeah, I agree with that.
Yeah.
So how have people been navigating this when they're trying to purchase? How do you kind of work with them with that during
a lot of it
time?
A lot of it, in my opinion, when we've been the most successful in the competitive market that we're dealing with, if you structure the strategy on the front end the right way, you can go in and have the ability to pivot when you find yourself in a multiple offer situation. You can leave a little bit of dry powder back if you have to come in or remove an appraisal contingency or put an escalation clause in place, or whatever it is. So, you know, to me, it's about building the right strategy and then given the client the confidence in that strategy to go execute it. That's about half of it. I think the other half of it is the job of, you know, myself and the agent representing the buyer to, for lack of a better way to put it, we're having to put a sales job on the listing agents. Why is our offer better than these other offers that you've been receiving? And you know, any little edge that you can create to make your offer stand out just a little bit more. So I mean, you know, little things like I'll grab my cell phone, record a 30-second video that says, you know, hey, Mr. Realtor, or hey, Mrs. Realtor, my client, John and Jane Smith, are going to be submitting an offer. Richie's probably going to get it over to you this afternoon or this evening. We'll let you know that, you know, you'll have my pre-approval letter and everything, but I wanted to give you something a little bit more than just that letter. So, you know, this is a strong buyer, strong cash position, has the ability to, you know, we've put a plan together that'll allow them to pivot if need be. And we've got that dry powder, like I was talking about earlier. And, you know, does it do anything? I don't know. It's gotten very good feedback. We've gotten a lot of our offers accepted. And I know for a fact we've gotten.
And it must be doing something.
Yeah. And we've gotten some of them accepted when we weren't the highest offer on the table.
Really? I mean, that says a lot. It obviously is making a difference in that.
Well, you know, if the other offer is, and I, you know, I won't name names or anything like that, but if the other offer is from a large national unknown lending center, versus somebody that the agent has worked with on, you know, 20, 30 previous deals, when we don't have an appraisal contingency, but the higher offer does, things like that. I mean, you know, you can structure it the right way where you're at least giving yourself a shot, even if you're not the top dollar figure on the table.
Are these the same kind of strategies you use if someone finds themselves continually coming up against people with cash ready to buy? Are you even seeing that a lot? I mean, I read about it, but is it really happening?
I mean, it's hard to compete with cash. You know, I think that's where things like the video or just a phone call to the listing agent itself, ensuring that, there's financing associated with this offer, but they're so strong, it might as well be cash. This
the
one's
whole
not
process isn't
sell.
going to be that much more difficult.
That's right. That's right. So you have to get a little creative there. But like I say, it's just all about giving them confidence that we've got the deal structured in such a way that I'm not worried about us getting to the table.
Yeah, that's when a good mortgage company makes a big difference, you know.
Absolutely. Absolutely.
Absolutely. All right. So is there anything else you want to say just about, you know, why you think it's a good time now to get a mortgage and buy?
Well, I mean, I think that it's hard to come up with a better reason than the buying power. I think
Yes.
hard pressed to convince me that there's another reason that's better than that. I think that if you do it the way that we've been working with our clients, with our borrowers, you come out ahead. You come out ahead just because, you know, one thing that we've been doing is giving everybody the ability to cast a little bit larger net, so to speak. So if they're a $300,000 price point buyer, I might pre-approve them up to 400.
Yeah.
Or if you're what, you know, and have a plan that works for them, you know, whether I can approve it or not. Obviously, at the end of the day, it also has to work for the buyer. But if I can come up with a plan that works for them at a much higher price point than they anticipated, now we're covering more ground as far as that low inventory. We got a bigger net, so we're going to catch more houses. And you can get that strategy dialed in such a way that you don't get quite as frustrated, which is that's the drawback to buying right now, right? I mean, if we're talking about why is it a good time to buy, we also have to at least say why is it not?
Yeah.
And that's the reason it's not, is the inventory, the competitive nature of the market. You know, a house sits on the market today for 7 days and everybody's like, oh, that's a stale listing now. You know, I mean,
yeah, right.
I know. So those are the reasons that it's not a good time to buy. So from my perspective, coming up with ways to combat that, bring it right back into the fold of why right now is as good. Yeah. We're going to see to buy.
I mean, if you can endure the short-term pain for a huge long-term
right.
benefit for, you know, you and your family,
that's right.
I think
it's well worth it. And when it pays off big.
What about people that maybe think, you know, they're first-time home buyers, they're renting, and they don't feel like they're ready? Like, what kind of credit do you need? What kind of debt income ratio is acceptable? Your income in general? What can get you into a house if you're kind of on the edge? I'm not sure if you could.
Well, first of all, everybody is ready to buy a house. The qualifier to that statement, though, is you're either ready to buy a house today, or you're going to be ready to buy a house in 6 months, or you're going to be ready to buy a house in 1 year.
Yes.
It goes back to that, to the strategy side of all this, is getting somebody in the best position to buy. But as far as answering the question directly, you know, there's still 3% down conventional money out there, 3.5% down FHA. You know, you've got your South Carolina Housing Authority, your USDA, and your VA, all which will let you borrow 100%.
Wow.
So low and no down payment options are out there. Whether or not those are best suited for every single borrower is a different part of the story, right? But where the strategy comes in. Credit score wise, you know, different lenders are going to have different requirements there, but you know, down to 600, we can get approved and closed easy enough. 620 and up for conventional.
Sure.
You know, so you've got a multitude of options there, and it just comes down to, you know, maybe somebody with a 3% down payment and a 650 credit score, the numbers don't work for them right now, even though we could get the approval. So, you know, well, how do we get them to a 5% down payment? How, you know, can we put a plan together to get them to 5%, or can we put a plan to get them together to 10%?
Yeah.
And we make some tweaks and some changes and address a few things on the credit to get them from a 650 to a 700, or a 700 to a 720, or whatever it might be. You know, it all goes into the pot, and you just kind of shake it up and throw it out on the table and, you know, piece it together in the way that makes the most sense.
How long have you noticed it takes for the credit score to change on the report after you've kind of moved?
Well, I mean, you can see, depending on what is tugging the score down and what factors are being taken into account for where the score is. You know, you can get a credit score from 650, 630, somewhere in there, up to 720, 730 in a month. Other times you don't have as much to work with. and it takes a lot longer just to get 10 to 15 points. So it
Gotcha. That
really
makes
just
sense.
depends.
What about, what do you think about someone who maybe was on unemployment through COVID? They've got a solid job. How long should they be with that job if they want to, talk?
That's where it gets a little tricky, because, it depends on whether or not they're a base salary type employee.
Yeah.
Or if they're an hourly employee. So maybe the hourly employee is furloughed last year, or was laid off, or was heavily reliant on overtime in order to make what they normally made. And now they're at some reduced version of that.
Sure. Okay.
A little bit more difficult. But I mean, if somebody was laid off for 6, 7, 8 months last year, but is now back on a new job, they don't necessarily have to have that much history on the job for the income to be usable.
That's interesting.
Yeah, so it's case by case. Obviously, think people like servers at restaurants, they're
that's going to be more challenging, I'm sure.
A lot of your hairdressers that are Schedule C people that didn't do hair for 3 or 4 months last year, but are technically self-employed. They're the ones that are being hurt the most by how things went last year.
Gotcha.
But others, have saw it ended up being a good thing for them. I mean, a lot of businesses thrived through it, and others, were severely damaged. So
I know I've count myself lucky. Our marketing company did pretty well. We have some great clients that stuck with us through the whole thing, and I can't have more gratitude about it. Sure.
No, absolutely. Blessed in that respect, obviously.
Does a remote job make any difference to a bank versus a sit in an office job? Like, do they even consider that?
Where it matters, we'll use my client coming down from New York as the example. It matters qualifying her on the income that she makes on her current job at living on Long Island. I have to be able to verify that she has the ability to work remote, and that working remote has no adverse impact on her income.
Yeah, that's interesting.
But outside of that, it doesn't matter. If somebody works from home or works from their car, so long as we can provide the documentation to show that they're being paid and how much they're being paid, et cetera, then it's completely usable.
And you're walking clients right through all of that whole life.
Yeah, absolutely.
Awesome. I know it's an ever-changing landscape. It's great to have someone.
Oh yeah.
Especially you're not tied to one place. You're looking for the best financial institution to match with the client, right? That's what.
Yeah, I mean, we're a private bank, so we are lending our own money and going out of Fannie and Freddie's guides. But when you get into the portfolio stuff, that's where you're really paying attention to the different investors and which one fits which box, because you're going to have some variations in guidelines there. But navigating through all that's probably 20% of my day every day is figuring out who's doing what, where, and how, why, who's changed they did yesterday.
Yeah, right.
What do we think is going to change tomorrow, and trying to stay on top of it as best you can. And so that's where having good resources on secondary and being able to make that quick phone call and saying, hey, I think that I'm right about this, but can you confirm? And
Absolutely. I think the older I get, the more I realize I need to surround myself with specialists, because
absolutely,
it's
impossible to know it all, right? I mean, I've like I said, I've been doing this for 18 years, and I absolutely learn something new every day. So
yeah, marketing is the same, especially digital marketing. I mean, literally, I just paid a boatload of money just to have some great training, just to make sure I know everything about Facebook and Instagram right now, because I do it all day, but it changes, especially.
It changes all the time.
You have to just dig in and be right there at the cusp of it. It's technology, and everything changes.
As soon as you got it dialed in, it's different.
Absolutely. All right, Clint, I think buying power, I think that is the message, and I think you're absolutely right.
Yeah. It's a good time to do it, man. Always a good time to do it.
Perfect. Clint, thanks for being on the show. I really appreciate it.
Absolutely. Thanks for having me.
Soon.
Yes, sir.
All right. Take it easy.
All right. Bye.